Hello and welcome to another episode of Startup and You. I'm Gitanjali Divakar. Did you know that startup enterprises can acquire many benefits if they are listed on a stock exchange? Would you like to delve deeper into the world of mutual funds? This week, we speak with Tejas Khoday, the CEO and co-founder of FYERS. FYERS is a technology-focused stockbroking firm. During our conversation, Mr. Khoday tells us why it isn't wise for first-time investors to consider investing in cryptocurrencies. He also tells us more about the challenges that startup entrepreneurs would have to face in the investment space. So, do you think mutual funds is a safer investment option compared to shares?
I wouldn't think so. That's largely dependent on their risk profile. See, someone who hasn't even heard about stocks and who is primarily attracted towards mutual fund investing because they've heard from people that you can get higher returns than, say, fixed deposit. Those people will obviously have to go and choose mutual funds because passive investing at the end of the day. They wouldn't have to deal with all the fluctuations on a day-to-day basis. Mutual funds are too diversified. They are pooled investment vehicles that deal with the public. So their portfolios have anywhere between 30 to 50 stocks. Even if a few companies do well within a mutual fund, it's not going to make a difference to the overall return by a large extent. Whereas if you're invested directly in stocks and say you have fewer number of stocks and you've invested more with higher conviction, if your convictions turn out to be right, you can end up making a lot of money. The perception of risk and safety has primarily got to do with how diversified the portfolio really is. That's the first point. Secondly, I think professionals are in a slightly better position to choose the right stocks. So even if they have a larger portfolio, they go through a thorough research process to choose those stocks within their portfolio.
What are the role of stock markets in the startup space?
That's a very good question. Essentially, I would like to say new businesses will be immensely benefited if they go public. If their companies are listed on the exchanges, then they would be immensely benefited. And to make this possible, both the exchanges, NSE and BSE, have launched small and medium scale listing courses where really small companies can go public and then investors can find them and provide them with the necessary capital. But the thing is, there isn't much awareness about this, so that needs to come in. And also the compliance with regard to getting listed on the exchanges. Most young companies wouldn't like to deal with the excessive compliance because all the results have to be reported in a much more detailed fashion on a regular basis, and they much rather focus on their business. So this is the prevailing thought process among young entrepreneurs. And also, I think most of the startups actually they start off with looking for seed funding and then eventually, Series A and so on and so forth. So that seems to be the popular way of raising capital. But I'd say that if there is more awareness about listing young companies, then certainly I think entrepreneurs would certainly not shy away from it because there are immense benefits. And mutual funds essentially invest in larger, mid to large sized companies. So I don't think that mutual funds would invest in small and medium scale enterprises which are newly listed on the exchange.
Listen to the whole interview on www.thehindubusinessline.com.